And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the Limit Up Podcast. I'm Dan Hodgson, sitting down with, as usual, Jack Belter. Jack, how are you?
I'm good. I am off location from my usual spot. I'm on a porch at my parents' place. So
Well, I was going to
that's
say,
fun.
you've been bouncing around this week a little bit.
Yeah, that's what happens.
Life of a dad. Well, Jack, we got some market movement in some of these markets, to say the least.
Yeah, you missed your chance to say, speaking of bouncing around, but mostly
Right.
falling through the floor. Go for
Falling
it,
through
Dan.
the floor. Yeah, we got crude oil. Crude oil bounced around, right? We made a press higher, did not like acceptance up above yesterday's value high, broke back inside yesterday's range, worked our way right back down to settlement price. So really nice two-way trade there in that market. But the stocks, Jack, this is the big one. Stocks are down. And when I say they're
Yes.
down, they're down big right now. There's a lot to talk about in what's leading these stocks in this direction. Apparently my audio is not great. Sorry about that. I think it should be good. Anyhow, stocks are dumping pretty heavily. We got Powell coming out saying potential for, or likely, we're going to see more rate hikes, but we're going to dive more into what's going on in those markets here today. You got gold stays inside really nicely. Gold works side to side. Euro opens up last night. We get a nice rally in the euro. That market broke all the way down to settlement price. Once we opened up here, we saw a nice little press higher, but in a market that's working its way lower, you want to look for that little bit of strength. We got a little bit of strength on the open. That market finally broke, worked its way back to settlement price, and then no surprise, rates continue to rise. Treasuries continue to press lower or move south, and that's what we got here in the 10-year note. That market makes no attempt to work its way back to settlement price, continues in that downward trend.
Yeah, especially if you watched the Hogue show this morning with the live trading, we're talking about the stock rally being a hollow one, right? There was no volume, no increasing open interest the last 2 days, looking to sell that strength. And boy, man, it's hard to remember just 8 hours ago when the market opened green all around. That was like the last I saw it before I was on the run.
Yeah, we had a nice overnight move. The market was just trending, creeping higher, but very low volume in the overnight session. And as soon as these markets opened up, it gave a little head fake. You saw a little bit of a push higher. We made some highs, but that didn't last long, and that market rotated down heavily.
Yeah, anecdotally, it kind of feels like we're back in the day. Do you remember during the height of the pandemic moves back in 2020, how it always seemed that the futures were juking the other way, and then it would just completely reverse and get, so if it was green futures, it would just be monkey hammered and vice versa. That's kind of what it's felt like recently. More and more of these days where you don't get the open one way and then continue to move.
I think so. I mean, I think the biggest thing here, Jack, is like as soon as there's a little bit of an inclination to sell, everyone hops on that side. Where the last, I mean, let's be realistic, over the last 10 years, minus a couple breaks, pandemic being one. We saw one back in December of 2018. We've seen a few of them over, excuse me, December of 18. We've seen a few of them over the years where we'll get these sell-offs, but lately what we're seeing people looking to the short, where it was usually any inclination to buy or any buy signal, everyone was hopping in. That's not happening as much. So the rallies are a little bit weaker and the breaks are pretty strong.
Well, that's what's changed. Both of us actually were talking about, I think last week, how we thought maybe we hadn't seen the lows yet from bouncing. I think the NASDAQ, went down to about 13,000 on the last one. Is now people are looking for that drop of blood in the water. It used to be looking for one piece of good news to justify the buy side, which you mentioned, and then pile all onto the trend. Now, whenever there's a sign of weakness, that's what people are looking to do. And the rallies are more tentative. You see the lower volume there. Perfect example today, as we will eventually transition into our main topic, is a big bucket of blood in the water yesterday was the earnings from Netflix, which I believe was down 35% on that. Am I right there?
You are. It was about 35 right now. We're down about 3.5% today in Netflix. But yeah, yesterday, huge sell off. And I think there's a lot of tested to that right now. Number one, subscribers decline, first time in 10 years. They're going to crack down, which makes people less excited about it. We've seen price rates hike in Netflix pretty recently over the last couple of months. I think everyone got an email recently about it being a price hike. Just looking at Netflix right now, year to date is down 64%. When we opened up this year, this market was up around $600 a share. Now we're trading $218. So huge sell off. And it's just been continuous over the months. And then yesterday with earnings coming out and talking about user growth, not growing, but declining. That's enough to send everyone scurrying.
Yes, including the wrong side of the stick on this one was, did you see the Bill Ackman story today? That he sold off?
I saw it in your notes. I wasn't going to even mention it. I know that's a big bomb drop there, so I'll leave that one for you.
Yes, Mr. Ackman in the last few months has lost $400 million on Tesla and closed out the position. I wrote a little note there that no matter how big you are, you still need puke limits. Hopefully not 40% below what you put into it, but that trade hurts. I have never personally lost $400 million, but I imagine it does not feel good, Dan.
Jack, I'll tell you, I'd love to be in a position in life where I could afford a $400 million loser. I would love to be in that position in life. So
yeah,
I don't think I'll ever be there or have any intention of getting there. But I'm getting a lot of comments here that my audio is off, and it must be that my headphones are hooked now.
That's probably better there.
Yeah, it's way better.
Thanks for notifying me ahead of time, Jack.
Oh, it just sounded like you sound like you're talking through a phone. I didn't know exactly what was going on. Didn't want to say it in the middle, but the commentariat has got your back there, Dan.
Well, we got it now. We're getting messages from other people too. So I think we should be good now.
Okay.
So I digress. Let's get back to these. Let's get back to all these stocks. I think there's a lot to look at.
Well, I think that the reason that we are talking about this today, I mean, a lot of you guys aren't trading single stocks here. That's not really what we do at Top Step or otherwise. But if any of you do trade at Top Step, chances are overwhelming based on the data we have that you are trading the NQ. And the NQ is quite concentrated in just a handful of names, call it the FANG plus. They keep on trying to make that acronym longer and longer, right? Because you got to have room for Tesla and NVIDIA. I guess that's another N in there. But basically a huge amount. We've looked it up before. I think like the top 10 companies in the NASDAQ are way more than like a third or close to half. I have to look it up right now. But Dan, how does it affect the way that you look at it versus something like the S&P 500, which is a little bit more balanced?
Yeah. So, the thing to keep in mind, what's been our lifestyle. Apparently my audio is now worse. I'm not sure what to do. Sorry about that, everybody. Got it on the fancy microphone that I use every time. Hopefully we're getting a little better, but anyhow, when I think about this stuff, right, when I'm trading the future side of things, S&P versus NASDAQ, I got to keep in mind the macro picture, what happened over the last 2 years that had NASDAQ being the leader as we watch these markets rally over the last 2 years. Well, our life became tech-based. Jack, we're still doing it right now. We live in Zoom. We work from home. We could not do our jobs if it wasn't for tech, but you're starting to see people kind of venture back into regular life again. So Netflix, prime example, right? What's gone on over the last few years? Well, you've got everyone and their mother creating streaming software. So you're diversifying. People are diversifying. They're looking at it and saying, and I do this. I have multiple streaming service accounts, and I'll watch one for like a month or two and go, okay, I'm all caught up on everything. And that one, we're going to cancel that one. We're going to open this one for a month or two. So you have no subscriptions there. So things like that. So that's really what I'm starting to pay attention to. Is life changing for everyone around the world? And how is that going to affect the markets? And if we're stepping away from tech, like we have been so heavy in the last 2 years, if you start to see people step away from that, those are things you want to think about. We're going back to brick and mortar, and you're going to start to see lifestyle kind of getting back into the swing of things. You're going to start seeing people travel again. Then we're going to start to look at the S&Ps, and you may see that being the stronger market of the two right now. So that's really where my head's at, and watching these major heavy weighted stocks such as the Amazons, the Googles, or the Alphabet, excuse me, Meta, which I pulled up the Facebook stock today and it kept saying Meta. I'm like, that's not who I'm looking for. I'm looking for Facebook. Oh, wait, they changed their name to Meta. So
Yeah, that's the hot thing that everyone does now for their holding companies. I looked it up. The top 4 companies, and I believe so. The NQ follows the Nasdaq 100. The top 4 companies in the Nasdaq 100. It is almost like incomprehensible. Apple, 12% weight. Microsoft, 9.8. Amazon, 7.3. Tesla, 4.8. Even without getting to Alphabet. So the top 4 stocks, right? That's more than a third of the index right there from 4. So if there is something, even though we're talking individual stocks, if these seemingly invincible ones, especially those top 3, Apple has been so incredibly resilient through all this because they make a physical product, they charge a huge premium, make a ton of money. But any weakness in those is just really going to close that gap, because there's been a huge divergence over the past 2 years between the S&P 500 and the NASDAQ, right? The NASDAQ is screaming higher this whole time. And could this be a gap that continues to close? We'll see.
So I turned my volume up a little bit here based off of some commentary we got. So hopefully it's a little better. But Jack, you mentioned Apple. Apple, the strongest one of these ones that we're looking at, still down 8.5% on the year. Year to date, that's down 8.5%. If that's the strongest, one of the biggest factors into the NASDAQ, and that is the strongest of the biggest factors, that one's down 8.5%. I mean, if you went across the board to any of these major ones, you're seeing double digits down on the year. Who was one of the big talkers, right? We've been watching Tesla for the longest time. Tesla down 16% on the year. Amazon, who you think, how could they get hurt? They just continue to take a little bit of a hit. They're down 13% on the year. Alphabet down 14%. Facebook or Meta down 44.5%. And then the next one that's kind of coming in, I know we're talking NASDAQ, but we're going to kind of bounce around because I think this one's kind of interesting too, that I think is going to be one of those big down stocks. You got Disney. Disney's down year to date 22.4%. So you've got continuous down markets across all these stocks. And those are things that we want to pay attention to.
Absolutely. It will be super interesting. I'm looking at Apple, right? Because interesting enough, so Tesla smoked earnings, right? Tesla's up today when everything else is down. But a lot of these companies, especially Tesla, have valuations. It's not that they're not doing really good business. It's just that the frame of reference has changed. I was just thinking the other day, when you look at the movie The Social Network or something, or you think back 10 years ago around that time, when people were talking about unicorns for investors, the definition of a unicorn was $1 billion. I think that's what Sean Parker says in the movie, like $1 million's not cool. You know what it is? $1 billion. They're like, holy crap, $1 billion. Now, look at any company any kind of like newish tech company that's listed on the NASDAQ, or I could name some, but I don't want to pump or spit shade at specific companies. But now it's even the small ones, it's 10 billion. It's like, oh, it's worth, do you know how good a company you have to be worth $10 billion? I think we've grown blind to how good that is. Whenever I see comments on especially the stock trading things about like, oh, this company should be here, it's like, well, it's already worth $20 billion, right? They've already won. That's successful, man. Like, there's not many companies out there that should be worth more than $20 billion. And now we're talking with, listen, Apple probably should be the most valuable company in the world, but $2,000 billion plus. That's a lot of money.
For perspective here, you bring up Tesla. They're down on the year, but they're still a very successful business, right? We can see that they're the big thing that I look at when I look at Tesla, and we're talking about valuations. Tesla, I can promise you their revenue does not equal their market cap. Their market cap, $1.04 trillion.
Oh, their revenue doesn't equal? How many companies in the world? No one
Right.
makes $1 trillion in revenue.
Right. But like when you go to another major car, let's talk another major car company. Jack, you probably know this pretty close, but like look at Ford, biggest US car company we have. I think there's a crazy stat out there, like every 10th car on the road in the United States is a Ford F-150. I'm fabricating numbers here, but it's something kind of drastic like that. What's the market cap? Unless you're Googling it now, what's the market cap on Ford?
I'll guess. Ford, I bet you is $30 billion.
Double it up, 63 billion. And Ford can promise you their revenues are stronger than Tesla. Their production line is stronger than Tesla. Everything about Ford is technically stronger than Tesla, but they are a tech company, right? They're not just an auto manufacturer, but they're tech. They're in the tech realm, and that's one of their strongest things. So it's like putting those things into perspective. These companies are still wildly successful. It's just a matter of
scale.
Exactly.
If Tesla were to go down 90%, and we're just using Tesla as an example, I don't have a strong feeling either way on it, but just to get the idea of how bad things could get with sentiment, right? If Tesla were to go down 90%, that would mean it's $100 billion company. That's still way bigger than Ford. And it's like $100 billion is a very successful company. Right now, the US GDP is around $20 trillion a year. So that's the sum total of all goods and services exchanged between the 350 million people living in the United States of America and our imports and exports, $20 trillion. So is Tesla worth 5% of that to buy?
Apparently.
I don't know. Apparently it is for some people.
It's just kind of amazing. And I think you said it really well there, Jack. You have to put it to scale, right? What's going on in these? I got a lesson, and it was actually a guest we had on the podcast a couple of years ago. Jack, you were unavailable, but it's a good family friend of mine, Greg Baird. He was on our podcast. He's a wildly successful trader. Professional poker player as well. Really just an interesting human being. And he made a comment to me a few years ago. And he said to me, he goes, there's a point when investing in a stock is investment, and then there's a point when it's trading it, such as like it's a commodity. That's what some of these stocks really have done. These companies have turned an investment into the company into more of a play towards trading. When you look at Tesla, people are going to continue to buy this up until it says otherwise. So that's the reaction we're getting. And you can look at it like you're trading, a major futures product in the sense of like, hey, I'm not buying this because I think this company's worth a heck of a lot more. You're getting into this because, hey, we came down to a level that I like in this market. This product bounced. Let's use $1,000, right? We're sitting right there right now. This product's bounced multiple times off $1,000. We've seen it run up pretty strong. I got a good chance to make $100 or $200 into this trade. And that's kind of what people are looking at. So the basic principles of investment kind of go out the window, and it becomes basic principles of trading. And that's what we're seeing.
Yeah, that can be trouble. And then there's all sorts of options shenanigans going on now because they've been unleashed on the entire market. Yeah, but I would argue that's somewhat unsustainable in the long run. Like, I'm interested to see what would change this sentiment right now. Because right now I'm looking to sell strength. And we're talking about indices, right? Because all in all, something like the NASDAQ, like the NQ, it hasn't been that hammered off its all-time high, right? I mean, that was like 16,800, somewhere around there. I mean, this is nothing. We haven't, for those of you who were around during 2008, it just seemed like the world was ending, right? I mean, S&P 500 went down to, I think, very coincidentally 666, I think was the absolute low, or somewhere right around there, which is just too perfect. Somebody had that as their level and just went with it.
Everyone did.
Yeah, everyone. That was super scary. We're not even close to there yet. So I just hope that people who are trading this, I think more so with stocks than indices, but I think with stocks, a lot of times people see, oh, it's down so much. How can it go down more? Well, it certainly can. So I don't want to be too like doomsdayish. Like, I'm not calling out that we're going to lose like another 50% on the NASDAQ, but it's definitely, I still think we're taking out that 13,000 level.
I think we have a chance. And to bring it back to a positive thing, right? Shorting stocks, it's not a thing, really. You don't have the chance to say, hey, I'm just going to sell. I'm going to short Tesla that I don't own. What you can do, though, is really, I think a lot of our traders here at Top Step, and I know a lot of retail traders out there, are finding some excitement in the NASDAQ market. And this can apply to all the other indices. Take these big heavyweighted stocks, these Apples, these Microsofts, these Googles, pay attention to them, keep them on your radar. And that's going to really help you kind of understand what to look for in the NASDAQ. If you open up and you see Apple is down 15%, that's an indication. There's an indicator there. Okay, one of the biggest weighted companies in the NASDAQ is down 15%. I'm hard pressed to buy this market today when you're looking at the future side of things. So just those are ways to look at it. And I think it's important. I do this with everything I'm doing. I got to pay attention to more than just the market I'm trading, but where are the factors that have an influence on this market, right? We can talk treasuries right now. The biggest talk around treasuries, interest rates. What's going on with them? What's Powell saying at the Fed? What are they doing there? They're going to continue to hike interest rates. That's going to have a major effect on the treasury market. Same principle applies to the equities, because equities have a lot going on. So you get the Powell conversation. You have these heavy weighted stocks. If they're taking hits or if they're super strong, right? We're in earnings. Huge earnings come out and these markets do really well. There's a great idea to start looking for potential for buy opportunities in your day trading.
I think those are numbers, the earnings numbers, especially for the NASDAQ. This goes back to the concentration thing we were saying. Those are numbers that you got to be aware of if you are trading the NQ. Now, they'll usually, if you're trading, well, depending on whether they're in the morning or afternoon, sometimes they'll be after their close, but you'll be able to trade them in the futures, maybe not necessarily in the combine, depending on what time they come out. But something like Apple earnings or Amazon earnings, if you're trading the NQ, that's going to create a huge movement. Like even yesterday after the bell, the futures were still trading. I mean, I think the NQ plunged 100 and some points pretty much right away with the release of the Netflix earnings. So if you don't know when those are coming out, I highly encourage you to mark those down, especially the top 5, maybe 10 companies that are in it that make up, more than half the index.
That's a great idea. And just one place you could do this, go to investing.com on the far right at the top toolbar. You're going to have calendar and then there's earnings. Click on earnings and you can filter them out. They use bull, like a bullhead, as like one of their filters. Click the 3 bulls, aka the 3 strong ones. That's going to kind of filter out which product or which company's earnings you really want to pay attention to, and just look at it every day. I look at it constantly to pay attention because those are things I need to pay attention to. If I'm happen to be carrying something through the close when there's an earnings in the afternoon, I want to be thinking about that. I want to be paying attention to what I have going on. So we got to run through that all the time because it creates opportunity. Really does. It creates an opportunity. So keep an eye on that stuff. It's just as strong sometimes as a economic release. Yeah.
Well, good stuff. Hopefully some of you guys who are out there have checked out the Tuesday and Thursday Make Hogue Monies at 8:20. We sent out an email to everyone on the Top Step list yesterday. Those have been fun. He took a big winner at the end, getting short the S&P today. So we'll see how that goes from there. So Dan, we'll do a little guessing time for next week. In addition to, we'll get your mic straightened out. And thank you to everyone who commented to that effect. That is the sort of feedback.
I have gotten word it's much better.
Okay, that's good to hear. Sound perfect to me now. Let's play a little game. Where do you think we
Let's
are
play.
in the NQ next Thursday, 3 p.m.?
Can I just say lower?
Oh, come on. You got to do better than that. If not, I'm going to
500 points lower.
500 points lower. Okay. I'm going to go hardcore and say we're going to be testing that 13,000.
Okay. I had
That's
to close
hardcore.
my charts out because my internet was getting a little slow, so I can't see exactly what's the price it's at this moment. I know you have it up.
Could change in the time here. Frankly, my internet's been a little laggy too. Everyone in Illinois today, like Hogue said, internet problems. It's just been like a constant thing here.
And I'm in Wisconsin.
Yeah, it's all the same sort of area. You're not like in the Upper Peninsula or something, Ben.
No, definitely not. I'm still in very urban area.
Yeah, I'm taking forever to load. I think we were around like around 13. Can't believe this. It's just not loading.
Well, when I looked, it was about 500 points lower I could see happening. So let's take a look back at this next week when we sit down.
Yeah, we'll get our stuff straightened out in the meantime. I'll be back at my home base. So thank you for bearing with us today. But like, thing to take away is pay attention to those earnings for the concentrated companies at the top of the NASDAQ 100 if you're trading the NQ. Good luck out there. And ta-da, we are at, oh, I was right, 13,733 right now.
All right. So you're looking at a 700 point drop. I'm looking at a 500 point drop. Let's see what happens. I bet you it's dead center. It's 600 points.
You know what? I hope so too, but I also hope that we're dead wrong. Like I'm saying, this is like it's going to be cool when I'm right. But if it's 1,000 points higher, hey, I'll be happy.
I'd probably be a lot happier, 1,000 points higher. My portfolio would be a lot happier. I have gotten very sick at looking at my numbers on a daily basis. So
I've shut it down. Like my non-investing accounts, I've just keep them out of sight, out of mind. I know
I've been doing that. I deleted the apps the other day. I was like, I don't need to look at this. I have a long-term plan, not a short-term thing. So don't look at it today.
Yeah. Everyone out there, hope you've somehow managed to beat that. But if not, bear with it, manage your capital, stay safe and trade well. Let me try that again. I can't see that many W's in a row. All right. Trade well, everybody. Namaste. We'll see you next week. All right.